There might be a bit of a spanner in the works for my dollar bullish optimism. Yesterday we had some very important news for the dollar, such as NFP, unemployment, average hourly earnings, and we had manufacturing PMI. And I'm sure, as you can see by the red on this screen, it's not great. So we saw manufacturing PMI come down to 48, showing contraction in the manufacturing sector. We saw U6 unemployment tick up to 7.9. Average hourly earnings, granted, did increase. However, it's not enough to bolster the dollar after the other bad news we had. We've got NFP as well down here at 73k. However, there is worse news. We can see that NFP was revised down from previous to 14k. If we just look here on the Edge Finder, we can see that the initial release last month was 147k, which beat the expectation or the forecast of 111k. At the time, this was a big optimism booster for not just retail, not just me, but also for smart money. However, we've just had the revision down to 14k, which is pretty bad, and honestly makes me question the integrity a little bit of the Bureau. How could they calculate it so wrong? So this shows a very weak NFP overall. So although we have been beating the forecast month on month, we have now broken that trend. We can see we went from 228k beating forecast to 177k beating forecast, 139k also beating forecast here. We just missed forecast, and previous was revised down very low. So taking that into consideration, along with the overall weakening numbers here, we can see NFP is on what you would consider a downtrend, which tells us weaker labour market. Now mixing that as well with the weaker PMI or manufacturing PMI and higher unemployment, this is giving me a tickle in my stomach that I do not like. So the last video I made on this channel was basically saying I didn't really expect a rate cut for September. However, I did say that could change. Of course, we've got to stay adaptive in the markets. So this is the CME FedWatch tool, and we can see the likelihood or the probability or the expectation of a rate cut in September has jumped quite drastically. Before we were hanging around 60%, which, wasn't a big deal, but it wasn't a certainty. It didn't really lean either way too heavily. However, now you can see it's jumped up to 80%, and this is obviously on the back of yesterday's news. So the idea I mentioned in my previous video about the dollar potentially coming down to these recent lows, causing a double bottom towards 97.5 to 98, somewhere in that zone, then being able to pick up some dollars for a discount, is still valid. I would still take this approach, but a lot more cautiously now. I didn't expect the data to be as weak as it was. I'm willing to say, the data has changed. Now I'm more cautious. I'm not as optimistic that we are going to have a big dollar rally, or we're going to see 105 anytime soon, which could of course still happen, because don't forget, the labor market is one part. We've still got inflation to keep an eye on. And as we can see here, CPI has been ticking up. So again, we've gone from 2.3 to 2.4, and we're currently sitting at 2.7. So if we do see CPI starting to tick up, that might slow down that rate cut narrative. However, that would also reignite stagflation fears. So as I said, I would be looking to buy dollars here, and this would be a pure speculation play. Very low risk, obviously, assuming the data doesn't get necessarily any better or it stays as is, I would be looking to buy the dollar. And that's because of the overwhelming or the overarching price action trend and market cycle of the dollar. I'm not yet ready to discount this. It's prevalent. I don't know how anyone really could sit there and say this is 100% going to break lower. I understand the theory and I could understand the idea, but to sit there and be a huge bear right now, I still am not in that camp. But again, I am very cautious. So I think if we were going to start breaking lower, and this 10-year of decade-long trend is going to just snap and break, it could happen, but it would require the data to get worse. In this case, it would need inflation to come down. It would need the Fed to take a more dovish pivot, which again is possible. So as far as I'm concerned, the dollar has two options. It can go up or down, obviously. However, on a technical front, we could see something like this, where if we do see that dovish Fed pivot and we do see inflation starting to cool, I would be looking to short the dollar. If we do end up breaking lower and coming back up to retest, that would be a great opportunity to sell the dollar. However, If we do end up coming down, we see some sort of improvement, whatever it may be, some reason to be, to have some more optimism around the dollar. Again, it would be a nice idea to pick up here and then start looking for the 105 target, potentially all the way up into 110. But of course, we do need to wait. I'm very data dependent at the moment, taking those words from the Fed. And this has ignited fuel for the fire with the beef between Trump and Powell. So, there is also that sort of fear or uncertainty. I still don't think Trump is going to do anything. So we've got the headlines here from Market from yesterday. We can see Trump tells Newsmax removing Powell would disturb the market. I assume that's a typo from the source, but yeah, it means it would obviously disturb the market. It would cause a massive rush to safe havens. We did see this when we first saw that narrative come out. We saw gold spike, yen spike, we saw risk assets down. However, that would be fuel for equities and indices to start heading up as that rate cut idea would get accelerated. But again, I just don't think that's going to happen. I don't see a world where Trump is going to make any move against Powell, unless it's some sort of setup. Again, Trump is telling Newsmax Fed rate is too high. We all know this narrative that Trump is very, very unhappy about the current rate of the US. And again, here Trump tells Newsmax he would remove Powell in a heartbeat, but he doesn't have the power, he doesn't have the legal means to do so. So we are safe in that way. And again, here dollar drops broadly after US non-farm payrolls missed in July. But again, we've got to keep in mind the revision for last month that was very, very bad. Here, Trump Fed board should assume control if Powell continues to refuse to lower interest rates. So I am currently in the mind that yes, the Fed is very likely to cut in September. I am finding it difficult now to continue to defend my previous position of saying that they won't. And remember, this is an important part of being a trader, is being able to adapt to the news and say, okay, you know what, my old idea doesn't work anymore. This is the new idea. So I'm not ashamed to admit that it's part of the job. So we will have to see how the data continues to come out until the September meeting. Until then, I will see you later and I will keep you updated on the dollar and the markets in general. Have a great weekend and I will speak to you very, very soon.